Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, August 22nd, 2021. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest top ranked market newsletters. You can see our disclaimers there and our honor rolls or top 10 awards over the years there. Also want to alert you guys to our subscription services. A couple important notes. Our YouTube 10% discount on everything we have ends at the end of the month. Okay, we also have the contest under subscriptions. You can enter your guess for the closing price of the S&P at the end of the month. Every month, the 15th is the deadline, so if you do it now, it'll be for September. The one who comes closest wins a 30-day free subscription to all of our services there. You can see we listed them there. And without further ado, let's get rid of that. And where did our video go? Yes, remind you guys to hit that subscribe button, the reminder bell, so you know when our alerts come out, and the like button, which didn't show up, but it looks like that, only much smaller. Okay, we're going to get into the S&P TSLA Gold US 10-year. By the way, I want to go back a little bit. Let's get that S&P open. On the ratings, technical analysis at stock market tops, and I've been doing this for a long time, it goes out of style. There's nobody rates us anymore. I checked with a couple of my newsletter colleagues because Timer Digest either went out of business or stopped rating, so there's no more ratings to receive. So that's typical of stock market tops or highs. Technical analysis goes out the window and everybody just rides momentum and buys at the top till it goes down. The good news is that will change with the arrival of a bear market. Then everyone becomes a technician. Just watch CNBC or Bloomberg, all the guests on when the market's going down. Think back to March of 2020. Everyone was a technician doing Fibonacci and everything else in technical analysis. So I'll get off the soapbox and get into the S&P first. We want to look at things from the August 3rd low. This is a 10-minute chart. You can see 1, 2, 3, 4, 5. We wanted to see what we're going to look at, like the most recent 5-wave advance, the smallest degree, see what kind of correction we're getting, and then work our way backwards to a larger degree, if you will. And that's how we did back in January of 2018, and we ended up finding the expanding triangle that lasted into the March 2020 low, which corrected the entire advance from the 2009 low to the January 18 high. That was a 3. The expanding triangle was a 4. It ended in March of 2020, and here we are moving up from there. So I usually go big picture to small. I decided to go small picture to big a little bit this time. So if we can look back here and see what is going on, you can see we have 5 waves up there. Here's our Fibonacci corrections from the August 3rd low, and you can see the market corrected more than 100%. So what does that tell us? That tells us this decline is more than a correction of this low on August 3rd. It's something bigger, one bigger 5-wave degree ascent. Okay, well, what we have here is an ABC in purple. Let me make that a little bigger for you guys. Okay, there we go. An ABC in purple. We don't need this. Okay, that's the retracement up. Let me do this. Let me back up. Okay, I misspoke. Well, you can see this low here on August 19 is lower than this low here on August 3. So it retraced more than 100%. Okay, the red lines are the retracement moving from here. Okay, so this ABC in the cash, you can see the black here is a 1-to-1 and the 1.618 here. The cash fell in between those two. The futures did a perfect 1.618. Normally the cash follows the futures, so that may have thrown some people off late last week, especially Friday. And here is Friday, or was that, yeah, the 19th. I'm sorry, that was Thursday and then Friday. That may have thrown people off on Thursday and Friday because the cash did not follow the futures to a 1.618. Instead, it went up for 2 days. And you can see right here, it's hovering right around the 618 retracement of this decline from the all-time high on August 16th to the low on the 19th. As all these turn dates we'll get into later have identified so far, it's usually 2 to 3 day declines. One was as much as 6, but so far this is keeping with that trend, but we'll see what happens coming up here. Okay, so I want to show you guys, by the way, our Fibonacci target, our ideal target was 44.86 for a high. You can see it right there, and the market hit 44.80 on the 16th. Is that the all-time high, or is this just another 2 or 3 day correction before we go to new all-time highs? We'll get into that. Let me see if I have a picture on that, and that's Tesla. Excuse me. Let's see if I have a picture on that. Is this it here? Yeah, here we have two different wave counts, one in black and one in purple, and you can see we have an A, B, C down in purple. It doesn't really matter which one is the alternate and which one is the primary because we have make or break points on both. Okay, so we know when one is wrong and the other is right and vice versa. Okay, so if this is wave 1 down in the black and we have an ABC correction here the last 2 trading days, Thursday and Friday, right near the Fibonacci 0.618 as we showed, it was 44.37 and that was closed at 44.41. Okay, so the make or break for this count in black, which counts as a 1 down and a 2 up, is the beginning, or the wave 2 high on 818 of 44.54. A move above that high, 44.54, negates this 1 down, 2 up. Okay. Conversely, we have the ABC. Okay, that correction could be complete, could be a 3-wave complete correction, and we're moving up and up to new highs. We could label that 1, 2, 3, 4 very easily. That would come with a move above the all-time high of 44.80. The other key number to look at is this 43.67 low. A move below that knocks out this purple count and confirms this black count, if you will. Okay, so we have fairly tight parameters here. We have 44.54 to the upside and 43.67 to the downside. A move below 43.67 means we have a series of 1s and 2s, 1, 2, 1, 2, and a move up first above here and then above 44.80 means we've had an ABC correction and we're off to new all-time highs. Okay, tight parameters. We have our make or break points, what I like to call them, both for the bull count and the bear count. Okay, let me see, did I have something up? Let's get into this. Okay, this is my ideal Fibonacci price or time spiral. Okay, we have 2 spirals working. One from the March 4 low, which has had incredible amount of accuracy up to 7/26. That's July 26. It was at 99.59% accurate. Okay, and the next date in that sequence is October 23rd. From the 7/6 expanded flat, which we identified it could be a flat within a flat within a flat. We won't get into that in this conversation, but the next turn date on this one is 8/30, August 30th. So I put in there August 30, all-time high. That's possible. We're going to have to watch this. We have our parameters so we know. Okay, so if this sequence from July 6th is going to continue to mark highs, and the last one was here with a little bit of slippage, then we could expect that to mark a high. What's interesting is the 8/30 high plus 55 days equals October 24, which is a Sunday. Put your attention over here. This turn date, which has had ridiculous accuracy, next turn date is October 23, which is a Saturday. Okay, so and we're getting way ahead of ourselves here. So again, this is my ideal mathematical Fibonacci next high and next low. If August 30th marks a high and it starts going down and it breaks our make or break points, the first we would need to see is a break of that 719 low. I think it's 44. It's 42.23, 42.33. That would be our first signal of a reversal in trend. So a lot of things have to happen for this ideal dream scenario to come true. But if the numbers are going to keep marking turn points, in a perfect Fibonacci world, we'll see a high on August 30th and then a decline 55 days later, which is the weekend. So it would either be on Friday, October 22nd or Monday, October 25th. I'm getting way ahead of ourselves here, but I like to extrapolate these things out, and I did happen to notice the 8:30 date here and the 10:23 date here, and how there's 55 days in between. The weekend kind of gets in the way, but the market will do what it has to do. It'll go the next trading day before on Friday the 22nd, or the next trading day after on Monday the 25th. So that's our little dream scenario. Thought I'd put it out there. We'll see what happens this week. As you know, Monday the 30th. The 30th is a week from Monday, so it's 6 more trading days, or 1 week from tomorrow. Okay, today is Sunday. Okay, so that's it for that. I wanted to show you guys that deal there. And then, by the way, getting back on track, if this is a correction of more than the move up from the 8.3 low, then the next 5 waves of 1 greater degree is the July 19 low. So let's put this up here and see what we have for retracement of that. And you can see here, we'll get the 5 waves. And you can see if this was an A, B, C down, remember in purple, it came between the 382 and the 500 retracement level, okay, right in between there. And you can count easily a 1, 2, 3, 4. That's why we have tight parameters here to the upside and the downside. The market will tell us what it's doing. Okay, we got to watch our make or break points. The one here was the, we have them on that screen, okay. I got them, I'll show them really quick again for you guys. Right here, 44.54 to the upside, 43.67 to the downside. So we'll see what that is correcting. Ideally, is correcting from the March low, at least, of March of 2021, okay, which is, and that's going one more back, actually a couple more back, and there was our target there. And let me put these up here for you guys, okay. Let me get this March 2021. There's a 1, 2, and you can mark 3 here. Here, I'll mark it here where it's equal, and a 4 stays above the 1. And well, here I have it here. My apologies, guys. Okay, whoops. Let me move 4 up here. Let me move 3 there, and 5 target there. Okay, put that back in the screen. There we go. My apologies. 3 came between the 1 and the 1618. 4 down here. 5 target was 44.86. So far the high is 44.80 within 6 points. Okay, so that's what we're looking at from the March 2021 low, and we have a bigger spiral going a 5 waves up from the March 2020 low. But first things first, we took out that August 3rd low, okay, and now we're looking at the July 19th low right there. You can see I got a 42.30. I think it's 33. Yeah, there it is. That will be the first sign that we have a reversal in trend. We'll watch this play out. Next week should be important and interesting. Okay, enough with the S&P. With Tesla, we have our January all-time high 900. We have 5 waves down for intermediate wave A. Then we have an A up, a B down, and a C up for intermediate wave B. You can see there, and we're starting down. There's a lot of things to talk about here. One question was, why wouldn't you count 5 waves up from here? And let's just go through that for you guys, okay? So if we have a 1 up, a 2 down, a 3 up, and boy, that looked like a 4, didn't it? And then a 5, you put it wherever you want, okay? The only thing is I'll have the little dotted line here. Here you can see the wave 1 high. I'll put it on it, and you can see over here 4 broke below 1. That was our first key, and it did it several times, okay? So 4 can't overlap 1. So that negates that 1, 2, 3, 4, 5. Okay, we'll remove that. Another one I want to point out is this could be 5 down, 3 up, and 5 down, and the end at the double bottom. That could be the ABC correction. Let me throw that over there for you guys. We got make or break, so all you bears don't get too scared over there. Okay, let me move this C over here. Okay, there we go. That could be it, but what we would need to see is 5 waves up. And again, we don't have it. We have the overlap. Okay, so that lets us know. And then the next thing lets us know is this move from the August 13th high. Okay, I'm going to throw this back down here. From that high, wave C equals wave 1 at 368. Okay, let's get into the shorter term. This is a daily chart of Tesla. Okay, let's look at shorter term, and that is this high right here on August 13th. Okay, this C or B wave high. Okay, ABC for B. Let me move it back over so I don't confuse anyone. There, that intermediate B wave high from 813. So this is a daily. We will move to the 10-minute, and there is 813. You can see a clear 5 waves to the downside here. Okay, and then we have a move up, and let's just see what this has corrected. Here we go. Let's do Fibonacci retracement on there. All right, I think that's pretty close. And you can see I got that a little bit off there. You can see it's hanging around right between the 500 and the 618. Okay, ideally it can go to 699, right under 700, and still be a 2. You can see we've got a 1 down here, a 2 up here. If it stays where it is, where does 3 go? 3 goes to 614 from the August 13 high. 1 down right here, August 17. 2 up. I think that high is right here. Okay, on the 18th, right around 690 something. How about 693, somewhere in there? Here we got a 693. This does not look impulsive to the downside yet. Let me pull that out. There we go. We'll see how that plays out. This 2 could still hang around to 699. There's your make or break. 2 cannot retrace more than 100% of 1. So make or break for this count is that high right around 730. Let me see if I can pull it up here. 729.87. That's the make or break. Okay. To the downside, you bears need to see a move below this wave 1 low at 648, 648.88, 649, right around there. Okay. A move below here confirms the bearish count, and then we're looking at 1, 2, 3 to here. Let's see where the 1618 is on that, because usually it goes to 1618. That's 564, and we're well on our way to below 400 after that. Okay, so we have our parameters, we have our make or breaks to the upside and to the downside. All right, the bear count looks really good with this 5-wave decline from August 13 down to the 17th. That looks like 1, that looks like 2. 2 could still go up and make another double top or hit that 700 mark. Okay, and then look for 3 down. That'll be a powerful move, swift and powerful. If you're going to be buying puts or on the short side, you'll want to catch that wave 3. Okay, so let's move on to gold. Gold is a daily chart. There's the all-time high up there back in August, I believe it was. That was August 7th. And I've said all along, this did not look impulsive, meaning this ABC looks corrective, and it should move up. And of course, we got 5 waves to the upside, and it was looking good. And then all of a sudden, whoop, back over here on August 9th, it made a double bottom. We said if this low is broken, and it wasn't, that low of, 1678, and this got down here to 1681. Okay, so we'll watch this moving up. That should be another 5 waves to the upside. You know, second waves cannot retrace more than 100% of first waves. So this is a 1 and this is a 2 unless or until the wave 1 low of 678 is broken. I want to look at this a little closer to see what do we have here. What is this? The August 9th low. Let's get into an hourly. Let's see what we have here. Okay, let me open that up. Let's see what this looks like. Let's get rid of our retracements here so we can get a clean slate. Okay, it's pretty obvious where one is. Okay, let's get an extension. There is the low. There is one. There is two. And look at there. There's three. Boy, that's a definition of a 4. Long and sideways. Okay, let's put that on there. Let's get our pattern going. Okay, we have 1, 2, 3, and all this is 4, and it could go longer. We'll just throw 5 up there for now. But let's get a retracement for this this fourth wave. Okay, let's get a Fibonacci retracement of the third wave for a fourth wave target. It may not be exact. Let me see here. Get that. There we go. So it's sitting at the 236. Okay, the 382 is 1765. The 500 is 1756, and we should not reach the 618 because it would be below the wave 1 high. So those are the two we're looking at there, 1765 and 1756. Or it could just keep going sideways and go up from here. But this definitely is a 4. Okay, then we can expect a 5 to new highs in this 5-wave advance. Okay, that's it for gold. Let's look at the U.S. 10-year. That's interesting. Let me get this off of here. My apologies. Come on, Dale. We'll leave it on. Okay, so we have a 1 up, a 2 down, a 3 up. Oh, I wanted to point this out. The 4, well, that's just too much for me. Let me read there. Too much stuff on there. All right, I want to warn you guys that this 4 could go close to the 618 at 0.988. And what is the 1 high? 0.986. So it's got to hold 0.986. Remember, gold went down and touched within less than a point or a point of the wave 1 high. So 4 could still do that, but ideally it ended right here and it's moving up. This is a daily chart of the US 10-year. Let me get a little closer with the hourly here. Here we go. Let's move that up, see what we have going on for this move up. There you go. We got a clear 1, 2, 3, 4, 5. Then we've got an A, B, C. Here is where C equaled A. Here is where it's a, I'm sorry, that's a 1.618. Yeah, it's sitting right near the 618 on this thing here, right near that 1 high. Okay, so ideally this thing starts taking off. We need to see 5 waves to the upside. Not sure if we have that yet. So this still could be in a correction mode. But we have our make or break points for the US 10-year, like everything. Remember, let me get back to the daily. I want to remind you guys about interest rates in the US 10-year Treasury, that this low way back here in March of 2020, the pandemic low, ended a 39-year bear market in interest rates. It shot up, okay, marking a change in trend. We've got a 1 up, we've got a 2 down, and third is subdividing 1, 2, 3, 4, and then 5, okay? So we'll see how that plays out. Let me see what else we have here. This is my fantasy perfect mathematical Fibonacci moves. We'll see how that plays out. All right, here's our make or breaks. 44.54 to the upside, 43.67 to the downside. That was the expanded flat scenario. We can get into that another time, but it does have that next turn date of 8:30, which could mark a higher high than the 8:13. We'll revisit that in another time, and that's Tesla there. Okay, let me get back to the S&P. We'll leave our fantasy drawing up since it's close to fantasy football time. Anyway, we'll have our fantasy mathematical Fibonacci turn dates as they keep unfolding. All right, guys, have a great week. I'll touch base with you again during the week. And until that time, take care, everyone.